decode the earnings of BLS International, we've got the management, Mr. Shikhar Aggarwal, the joint MD of BLS International Services, is joining us on the show right now. Mr. Aggarwal, hi, good afternoon, and thank you for your time. Before we get down to discussing the quarter that you've seen, can you share if the geopolitical tensions in the Middle East and the recent push, the comments that we've heard by PM Modi urging for more domestic travel, has that impacted visa application volumes so far in this month at all or in this quarter? And are you seeing any slowdown in the outbound travel demand?
Let me start with giving a brief on our revenue figures. We have done 36% growth in terms of annual consolidated revenue. We have touched 3,000 crore odd revenue for this year, and we have achieved an EBITDA of 820 crores, which is a 35% growth from same year last year, and PAT of around 725 crore. So we've done 34% growth in profitability, compared to last year. So we're very happy about that. Having said that, we've been operating as a company from the year 2007, 2008. Every year there is different geopolitical scenarios happening in different parts of the world. We are a global company now with offices in more than 70 plus countries, working with more than 40 client governments. So there is definitely minor impact in different times of the year in different parts of the world, but that is compensated for to increase in volume in other parts of the world. So we regularly see ups and downs. In COVID, our visa volume had become almost zero. But now if you see this year, we have surpassed around 45 lakh applications, which is a growth of around 18% compared to last year when we did 37 lakh applications. Definitely, tourism growth, is good happening both at the domestic level and international level. It is good for the country if people travel more locally as well as internationally. In our contracts that we work for, the governments that we work for, we have seen steady growth and steady numbers coming in.
So just to prod a little bit more on that visa application number for quarter 1, how has that been for the first half of the quarter? And now that we're exactly in the middle, we're well past the midway mark of May, have you been seeing any slowdown?
So I can comment on the quarter gone by. Quarter 4, we did around 11 lakh applications compared to similar quarter last year. There was a growth of around 10%. And this quarter, the numbers are steady. And as in when the results are announced, we will be announcing the numbers. But as of now, our quarter is going strong.
That this quarter so far is shaping up well for you. Let's now decode your earnings a little bit. You did mention that there has been strong top line and bottom line growth. But despite this, Mr. Aggarwal, if you can help me understand, your margins continue to be flat at 25%. What is causing the stickiness? And on the margin front, what is the outlook? Any number that you're targeting?
See, if you see our margin on a consolidated level, definitely we have achieved a little bit of growth. We have done consolidated margins of around 25%, on EBITDA level. But if you see in our visa business, our margins have actually gone up. On a annual basis, quarter-wise, if you see, margins have gone from 34% to 38%. But if you see annually, our margins have now touched 40% in the visa business. A little bit of dip has happened in the digital business margin because of the reason of acquisition of RD Phyllis, wherein we had said that this business is at 3% profitability for the company, but it will lead to multiple synergies, etc. That is why our margins, in spite of growth of margin in the visa business on consolidated level, is flattish. So we expect to continue the margin percentage in the visa business. Whatever we have achieved, we have said in the past, we grew from 20% to 30%, and now we are touching 40%. Our target is to maintain the margin on an increased base. So that is the target as of now.
Understood. And you spoke about RD Phyllis. Has that acquisition turned profit or EBITDA accretive for you? Is that profitable now?
So the acquisition was profitable from day one. We bought a profitable company. And definitely, if you see our revenue and profitability in the e-service business, in our e-service, we have touched around 81 crores of EBITDA compared to 60 crores. So there was a growth of 35% in terms of EBITDA of our e-business, digital business. So that business is also going strong.
Okay, so that sounds good as well. Let's talk about the recent developments within the company. You've recently launched Slovakia visa application services in Lebanon and Kenya. How significant are these new markets for growth, and can we expect more such expansions across Middle East and Africa going forward?
So if you see our, in terms of our volume, that has grown to around 11 lakh now compared to, in this quarter, and 45 lakh compared to 37 lakh last year. There's a mix of factor increase in volume of the existing business, plus a lot of new contracts we have deployed this year for Cyprus government, for Slovakia government. We have won a contract in 80 plus countries. For the Indian embassy in China, we have won a contract for the Aadhaar UID Authority, 2,500 crore contract that we won for deployment of Aadhaar centers within India, in which phase one has already been deployed. So definitely, there's a mix of different factors going forward. As we have said, there are multiple tenders coming up for bidding. We have won few this year, like Cyprus, Slovakia, etc., that we've announced, and multiple others up for bidding next year. So definitely, we feel that we can, if we can win certain contracts, we can maintain the revenue profitable trajectory. Our target is to, maintain 20 to 25% growth on an increased base. This year also our target was similar, but we have achieved, surprisingly more growth than that. Our EBITDA has grown up by 35%. Compared to last year, but our target remains same to continue to grow that 20-25%.
Okay, and so that 20 to 25% number that you're sharing with us, Mr. Aggarwal, that's on your top line guidance for FY27, is that right?
So we are, and the profitability level, our target is to maintain 20-25% growth.
And how much of this will come from existing contracts versus newer wins? What would that mix look like?
No, we are quite secure in terms of organic business, etc., that we are currently doing, that we will manage to maintain this growth trajectory. If there is a major win of a new business, that could be an addition to that.
Okay, and also can you talk to us about the digital services revenue? That has seen good growth, but the EBITDA margin has slipped from 7% to 7% rather, from 11% on a year-on-year basis. Can you help us understand why this has happened? Any plans for this segment of your business?
So definitely, but if you see our revenue in the digital service business has grown by 100%. Our EBITDA on a whole has grown by 35%. We are touching 81 crore hours of EBITDA. This company was started only a couple of years back. We've already achieved, 81 crores of EBITDA. A percentage is gone down because of the acquisition of Ardifilis, which is at a higher revenue and less margins. But as we go along, you have seen in the visa business also, the EBITDA margins have really gone up and touching 40% now. We expect in the coming years the EBITDA margin in this business also to go up.
That sounds optimistic. And lastly, also, if you can help us understand, what are your medium-term targets for the revenue mix between visa and consular versus digital services? How is that pie going to shape up?
So currently, I think it is around 60-40. I'm not exactly sure of the numbers, but around 60-40 the pie. Both businesses are continuing to grow. That is the reason we listed this company separately, BLS E-Services. And we expect major business coming in both the segments of the company. So we expect the revenue mix to be same in the long run.
So understood, and that sounds really good going ahead. Congratulations on the quarter that you've seen, Mr. Aggarwal, and we hope to keep interacting with you in the quarters to come. Thanks for your time.
Thank you.
Okay.